Hello everybody, I'm John. This is JP Strategic Investments, and today we're going to talk about Patriot One Technologies and their earnings report. And we'll get into all the details. We'll talk about where their revenue is coming from, how much revenue they brought in, why their quarterly loss was so low, which is always a good thing, and all of the other details in relation to these earnings. So let's jump right into it here. The first thing that I want to show you guys is the income statement, and we're just going to take a look at some high-level main points from here. So first of all, revenue coming in at 700,000. Definitely seeing an increase here, so that is always good. And you may notice that a lot of these other expenses down here are a little bit lower than, or even a significant amount lower than the previous quarter. And just as a note here, personally, I am more caring about a quarter-over-quarter comparison here versus necessarily a year over year. Mainly because last year was 2020, we had a lot of COVID stuff going on that's going to skew a lot of the earnings. We had a lot of COVID relief funding, as well as the fact that they really haven't started to push sales until this year, basically spring of this year. And so I think it's more of a good comparison to tell us as investors what's going on if we look at this quarter versus the previous quarter as opposed to this quarter versus the same quarter last year. So again, as I just mentioned though, a lot of these costs, a lot of these expenses are significantly lower than what we saw last quarter. In fact, research and development is showing that there was an income from research and development and that there was actually no expense. Now, the main reason that a lot of these costs are lower are a result of COVID funding, Raytheon funding, some other things, and we're going to get into that, but I did want to touch on the fact that that is probably the main thing, or it is the main thing, contributing to the fact that we got this really low comprehensive loss of just over $1 million, as opposed to what we've been seeing in the $3 to $3.5 million range for a quarterly loss. And so now I want to take a look at exactly where the revenue is coming from, what is coming from PatScan, what is coming from Extract, and what kind of backlogs we're seeing, right? And before I get into this, I do want to say this quarterly report was actually, in my opinion, a lot better organized than previous ones. You can see from this chart that we have down here that we'll get into, breaks it down very nicely, gives us a lot more visibility than we did have in the prior quarter. So thank you, Patriot One, for doing that for us. Now, if we look at, again, 700,000 in revenue, it looks like 189,000 of that is PatScan revenue, or what they're calling now sales from the platform, right? So they're kind of calling PatScan the platform, probably because they're thinking of it as a comprehensive solution rather than specific solutions, okay? They're trying to package it all as one, which I think is a good thing. So $189,000 from the platform, or PatScan, and for Extract, we had about $520,000 in revenue, and that adds up to that total of $709,000. Now, if we look at this chart here, we can see the backlog. So they break it down by less than 1 year, what they expect to recognize, and greater than 1 year down here, okay? So as far as less than 1 year, looks like for PatScan, or the platform, we expect to recognize 525,000, and Extract is about 1.4 million. Then if we look at greater than 1 year, they expect to recognize 490, or right about 500,000, and 614,000 from Extract. So that gives us a total, if we add all of that from the platform and all of that from Extract, of about $3 million in total backlog. Now, some of you guys might remember in the last earnings report, we got a little note at the end of the revenue section. And it said, subsequent to year end, the company was awarded an additional 1.3 million in commitments, bringing its total backlog to just under 3.8 million. Now, this basically means that after that quarter had ended, remember this is the July quarter, so this is from the last earnings report, after that quarter had ended, but prior to the time that the earnings report was released, the company was awarded an additional about 1.3 million in commitments, bringing the total backlog to just under 3.8 million. Well, the earnings report wasn't released until late October, and so basically the time between when the quarter ended in July And when the earnings report was released was almost the entire first quarter, which is the report that we're getting now. And so if you look back at the current report, if we go back here, we have 3 million, right? And we recognized, or just over 3 million, and we recognized just over 700,000. And that almost completely gives us, added up, that $3.8 million. So the reason I'm bringing this up is because some people might look at this and go, okay, well, they had $3.8 million in backlog last quarter. Now they recognized a little over 700,000 of that, and they have 3 million left. They didn't get any new contracts for Extract or PATScan in the entire quarter. But you do need to keep in mind that this little note about subsequent to quarter end, that means that basically that 1.3 million is the contracts that they added in the first quarter. So even though we don't actually see that in this report, we can basically see that this 1.3 million or so are the contracts that were added in the first quarter of this year, this fiscal year, which is the report that we're getting right now. Now, the downside to this is it is kind of hard to tell because of how they've switched to the format in which they're showing it to us now, and they've adjusted some things. It's hard to tell exactly how much went to PATScan and how much went to Extract, but it looks like most of that went to Extract, which would basically mean that not a ton of PATScan contracts were added in this last quarter that ended October 31st. So that's definitely not a great thing, but again, it's a little unclear. You guys can do your own math on that. To me, it looks like most of that 1.3 million did go to Extract, or were contracts that were awarded to Extract rather than PATScan, or what is now the platform. If you guys come up with anything different with your analysis, definitely let me know about that in the comments below. The next thing that I want to go over here is the COVID relief funding and Raytheon funding and how that actually affected the loss in the quarter and what the loss would have been without that extra funding. And while I do realize that this funding is kind of something that's ongoing, we are still likely going to get some COVID relief funding, and they are getting more and more Raytheon funding, right? They initially had 3 million from, I believe, a year ago, maybe 2 years ago. Now they just got another 2 million US dollars. So it is something that could continue, but I think it's always good to look at the financials and say, okay, without that funding, how would the company actually be doing? So that's what we're going to do now. And basically, if we look at R&D, we had about $1.7, $1.8 million in funding that went to R&D, along with the supercluster funding and the COVID relief funding. I'm not too worried about the supercluster funding. That's a pretty big bucket that they're pulling from, so that's probably going to continue for a while. But as far as the COVID relief funding and the Raytheon funding, that's kind of what we're looking at here. So 1.7, 1.8, and about 188,000 in COVID relief funding. And we did also get COVID relief funding, about $86,000 worth of it spent on personnel costs. So if we take the COVID relief funding, add those up, 86,000 plus about 188,000, we're looking at close to $270,000 in COVID relief money there. And I do want to clarify something on the $1.8 billion worth of Raytheon funding that they got in this quarter. A lot of you guys probably remember that they got $2 million worth of funding from Raytheon. I think about a month ago they announced that funding. Well, a couple things to keep in mind. One, that is 2 million USD. So US dollars to Canadian dollars, that translates to about 2.5 million Canadian dollars. So you may look at that and go, okay, well, they had 2.5, they used about 1.8, so they have about $700,000 Canadian left to spend. That's not actually true, because about $1 million, it looks like, of the 1.7 or the 1.8 million that they got this quarter came from the previous Raytheon funding. As you can see, in December of 2018, they secured 3 million. They had received, as of this quarter, 2 million of that. And then in this quarter, they got the additional 1 million. So they actually had about 3.5 million Canadian, and so they used about 1.8. They should have about 1.7 left to use. Now, that means they do have some money going into the next quarter to be able to use to offset some of their losses, but how much would they have lost if they didn't have this funding and if they didn't have the COVID relief funding? Well, their loss would have actually been roughly $3.1 million because you have about 1.8 million from Raytheon that you now add to that loss. You have about $270,000 from the COVID relief funding that you add to that loss. So 1.8 million plus the 270,000 plus the or just over $1 million, you end up with right around $3.1 million, which is pretty much in line with the quarters that we've seen so far, maybe slightly lower. So we can say they might have reduced costs just a little bit further, but we definitely shouldn't be expecting this trend to continue where their next loss is even lower. Very likely, if they're going to be using this other 1.6, 1.7 million that they have left in Raytheon funding, if they're using it in the quarter that we're currently in right now, and we see similar COVID relief funding, we may see only a loss of about 1 million or so, maybe a little over 1 million next quarter. But after that, unless we've got a lot more new contracts, we're probably going to see that quarterly loss rise after the next quarter. So we'll have to see. Again, they have the plan to raise cash if they need to. So in general, what do I think of these earnings? Well, I do think we did kind of get a little bit of a pre-release of these earnings with that subsequent to quarter end note from the last earnings report. We really didn't get a surprise because of that as far as how much money in backlog they're going or they were going to bring in, because we kind of already knew that. It was a negative, in my opinion, that most of that money, it seems, went to extract, because that means that we didn't get a ton of new PAT scan or platform contracts in this quarter. So that to me was a negative there. Now, as far as other things, it would be nice to see, now that they're kind of breaking down other things in the report, it would be nice to see kind of revenue versus cost of revenue, so we can start to see maybe some profitability type of things, or what type of margins they're getting. I know they're still probably trying to keep that a little bit secretive so that they can outbid the competition on different things without cutting into their margins too much. And I can appreciate that, but hopefully maybe within the next several quarters or next year, maybe we'll start to get some of that. Do I think they're going to have to raise money still? I think they will probably still have to raise some capital even after using the Raytheon funding this quarter and probably in the current quarter that we're in to reduce their cash burn. After that, I think it's still probably going to pick up, even if we do get some acceleration within the contracts, which again is probably going to cause them to have to hire more people, and it's going to, raise some costs there. So probably we'll still have to raise some capital down the road, maybe a quarter from now, 2 quarters from now. They don't want to obviously wait till all of their cash is gone before they start to do that, and that's again why they've started to put together that plan already. So I would imagine we'll see some of that within the next quarter or so. Just my opinion, but I don't think they'll be just going right away right at that 50 million. And I would imagine they probably won't have to raise the entire 50 million, but we'll just have to see. Anyway, those are kind of my main thoughts on the quarter. Let me know in the comments below if you have any questions or what your thoughts are on this earnings report. Other than that, I will see you guys next time, and have a great day.